Okay, let's just be real for a second. The investment world in 2025, it is a whirlwind of headlines, hype, and just so much noise. It can feel totally impossible to know where to even look. So what we're gonna do here is cut through all of that static and try to find the real signal. All right, let's get into it. I mean, this is the big question, right? It's on everyone's mind. You've got all these options flashing in front of you. AI, crypto, good old-fashioned real estate. With all that going on, where is the smart money actually going? What's the move? Well, here's a number that might just make you sit up a little straighter. 97%. According to a report from Apex Group, that's how many asset managers are seeing strong or at least moderate interest in private markets from retail investors. What that means is that individual investors, people like you and me, we're becoming this huge force in the financial world. And that right there, that brings us to our first major idea, this completely new landscape for investing. It's being totally reshaped by the rise of the everyday retail investor. So, if regular investors are gaining all this influence, what are the trends they're actually pushing? Let's take a look at 5 things that are absolutely grabbing the headlines in 2025. Bankrate's analysis points to 5 big ones. First up, crypto. It feels like it's entering a whole new, more grown-up phase. Second, you've got the power grid for AI, think energy. Third, we might be seeing a big rebound for smaller companies, the small caps, after a pretty rough patch. Fourth, a revival for real estate investment trusts, or REITs, as interest rates start to shift. And finally, number 5, the classic, timeless appeal of getting paid through dividend stocks. You know, if we zoom in on crypto for a sec, the whole game really changed with the launch of those spot Bitcoin ETFs. That just opened the floodgates for institutional money and gave it a new sense of legitimacy. You combine that with a friendlier outlook in Washington and, well, you can see why it's a huge trend. But, and you've got to remember this, it is still a very, very risky asset. Most experts will tell you to keep it to a small slice of your overall portfolio. This one is kind of the story behind the story. Everybody is talking about AI stocks like Nvidia, right? But that whole boom runs on an absolutely massive amount of electricity. JP Morgan's pointing out that the companies in utilities and industrials, the ones actually building the power plants and the grid, they are set up for some serious growth. It's really the picks and shovels play in this modern day gold rush. So you can really see the spectrum that investors are dealing with here. On one end, you've got crypto, super high risk, but hey, high potential reward. And on the complete other end, you've got dividend stocks. They're all about income, and according to JP Morgan, they're about 20% less volatile than the market as a whole. It's that classic battle. Do you chase the explosive growth, or do you build a stable foundation? Which naturally leads to a really critical question. We see all these popular trends, but is that what the pros, the multi-billion-dollar funds are actually chasing? What is the institutional mindset really truly focused on when they decide where to put their capital? Okay, so let's open up the professional's playbook. A McKinsey survey of 81 major investors gives us a peek inside at what really drives their decisions, and it's often way beyond the daily headlines. And the answer couldn't be clearer. The number one thing, by a long shot, is financial performance. We're talking about stuff like EBITDA, a key indicator of how profitable a company actually is. See, it's not about the hype, it's about the balance sheet. After that, then you get to things like a strong position in the market, the quality of the management team, and then the prospects for future growth. But here's the thing, it's not just about the numbers. This quote from that McKinsey report really gets to the heart of it. The data, the numbers, that's what gets you in the door. But what seals the deal, what inspires real conviction from an investor, is the story, the narrative that ties all that data together into a compelling vision for the future. And that story, it has a few key ingredients. Of course, using technology like AI in a smart way is now a huge factor. Almost a third of investors cited it. But just as important, a clear, cohesive strategy and strong leadership, where everybody is on the same page, telling that one single powerful story. So now we have these 2 different perspectives, right? We've got the exciting headline-grabbing trends of the retail world versus the sober, hard fundamentals of the pros. So how do we bridge that gap? How do we get beyond the hype? So what is it? What's the tool that connects that world of exciting, flashy trends with the world of sober, steady fundamentals? The bridge is financial literacy. There's this great academic study on investor decisions that defines it as the ability to make informed choices based on 4 pillars: Understanding market information, having the technical know-how, being able to actually read accounting info, and just maintaining a broad overview of what's happening in the economy. This is your toolkit. And that brings us to our final section, and honestly, the most important one. We're talking about the ultimate asset, the one investment that you make that powers all of the others. All right, let's bring this all home. What are the big takeaways? First, remember that trends are signals. They're not a complete strategy. Second, fundamentals, they're timeless. The pros focus on performance for a very good reason. Third, a strong equity story is what makes sense of all the data. And for you, the tool that connects all of this is your own financial literacy, which means at the end of the day, your most valuable asset will always be your own knowledge. So as we wrap this up, I'll just leave you with this question. In a world that is just saturated with financial noise, with hype and speculation literally everywhere you turn, how are you going to choose to tune into the signal?